So I will not cover everything on this paper. I'm just covering a certain portion because I want to address certain aspects of your syllabus. All right. This one is grouped together with PPE, right? Property, plant, and equipment. So they like a significant component because it's a bit tricky sometimes. All right. But I'll try by all means to simplify it. All right, so we're going to start with the significant component. All right, so these are the topics I want to cover today. Okay. Right, so this we're going to do something from on a significant component. We're going to use the most recent paper, the FAC 3702 paper. It was question 1, right? For semester 1. I think this will be the only semester anyway, because they want to phase out this one, right? So PPE was taken from this module, if you didn't know. Okay, it was taken from this module. They just combined 31, 32, or sort of 01, 02, 03, 04, and made it 37, 64. All right, so that's the difference. Otherwise, the information is the same. Okay, and I think with this one, they're now taking shortcuts a lot with your current one compared to this one. This one was purely PPE. Now, because of time and trying to mix, so they're a bit confused, I think. Right, but please don't tell them. Eh? Right, so from this, when it comes to a significant component, we remember we said that for those that attended class, right? Let's take, for instance, a car. All right. This is a nice Dodge. I think this looks like a Dodge. So that engine, right? That engine that is there, right? Vroom, vroom, right? So we are saying it depends on the company, right? Sometimes because they are saying that this component, right, is significant to the operation of this vehicle. So they consider what? A separate what? Component. Right. Thank you. At least there's someone talking. Thank you for that. Right. So that means you need to, according to the standard, depreciate it what? It separately. Right. That's what we are saying. So so they usually call it a significant. That means it is what? It is of value, right? It is of importance. Okay. So in other words, this thing cannot operate with that. So the question will tell you that this is a significant component. So once you see a significant component, make sure that you calculate it what? Separately. Okay. So what does this mean? That means, for instance, if the value of the car is 10,000, right? No, I won't say rands, euros. Okay, rands is too cheap. Right, it's 10,000 euros, for instance. So that means in the question, they will tell you the value of the engine. If they say the value of the engine is 4.5. So remember, we said the standard is telling you that. Let me give you the paragraph. I won't read as per se, as I usually do. All right, you can go to paragraph, it's ISA. Right, ISA 16, you can go to paragraph 44. Right, that's when they mention this. That some component are of what? Are of a significant portion of the PPE item. So you need to depreciate it separately. So meaning to say the whole car, not just the car without, the whole car is 10,000. So what is the common sense behind? This simple means that if the whole car is 10,000, that means, and they tell you that the engine value separate is what? Is 4.5. So meaning to say that the value of the car without the engine is how much? Just minus, right? You understand? Then what do you get? 5.5.
500.
5.5. So that means when you're now depreciating, you're going to depreciate the car on its own, right? Separately. And depreciate this thing on its own separately. They will give you the information that is enough to depreciate the engine. Okay. Because you know, all right, from common sense, the body and the tires and all those things without the engine, right? They have different life spans. An engine can be what? Can be shorter, can have a shorter lifespan than the body. Sometimes the body can have a shorter lifespan depending on how powerful the engine is. So that's why they are saying if these have separate lifespan, depreciate them separately. That's all we are saying. Then you combine them when you separate, when you what? Depreciated them, which is what we're going to do. So that is the principle with any question that covers significant component. So significant, cut, depreciate separately, and don't forget, subtract that value from there. Don't come and say this over what, okay? You first say this minus that. Then the information will be provided for the lifespan of the body on its own. Then you depreciate the 55. I'm just giving an example. All right. So let's do the question. Let's read it quickly. Right. So we're going to start here. Obviously, the first thing that you need to determine in any question, people, very important, is the year end. You can't operate without the year end. There it is, 30 April 2023. Right. You've got that out of the way. Right. Then we come to this one because the significant component is on the factory building. So what they will do is they will always try and confuse. Even on Monday, they'll give you something that's off. But go back to your principle. Is this a significant component? Oh, okay. So the whole thing is how much? The value of the significant component on its own is how much? Right. Let's try that together. Right. On 4 April 2019, Ozone purchased land for 1,750,000 to construct a new factory building in East London to be closer to the MIPENS manufacturing plant. Ozone contracted the MDZ Corps for the construction of the factory, and the cost of constructing this was 6,500,000. An independent valuator separated the cost of the construction into the following components. The building, the structure is 4 million, right? So within this, right? And then the server, right, is 2.5. Okay. Then they are saying the building was available for use on 1. So you know this. That's for accounting purposes. Okay. Was available for use on 1 Jan 2021. Oh, okay. By the way, what is my time frame? Okay, it's 1 May 2022 to 30 April 2023. Oh, okay. So we bought this in January 2021. So that means what was the time frame then? So if the time frame, that means, remember, it's 1 May 2020 to 30 April 2000 and what? And 23. So that means they brought this thing into use in the 2021 financial year. Oh, sorry. Right. 2021 financial year. That means how many months were left? 4 months. All right. The building and the server are depreciated on the straight-line method with an estimated useful life of 20 years with a 600 residual value for the building, right? And the server is depreciated over 10 years with a nil residual value. So there's no residual value. There is no estimated value of how much you can sell the asset, okay, later on. All right. Some smaller parts of the server will need to be updated every 115,000 hours of use. The cost of the smaller parts are 345,000 and is included in the total cost of the server and is included in the total cost of the server. Right. Then, right, you should have that thinking question mark, right? Popping, right? Just above your head. These parts are depreciated using hours, used over the expected hours of use, right? Up to the end of June 2022, the server used 39,000 hours, including this for May and June. Why are they providing this? We'll find out. In early July 2022, there were glitches in the production due to malfunction of the server, and that led to manufacturing incorrect specifications of the valve, right? So these guys manufacture valves, right? Like, I don't know what they use them for, but valves, right? And then after the investigation was conducted, the malfunction was due to the incorrect installation. Someone made a mistake in mounting the server and everything else, right? Management decided to replace all the smaller parts and purchased the new parts from a German supplier and contracted them for their installation service. So they said, guys, we're not going to touch anything. We won't hire local. These guys will buy from them and we'll call them to install. We don't want this mistake anymore. Right, because remember, initially it was in what? Installation error. Right, the costs of the new parts were 17,000 euros and 6,000 installation. These guys are expensive. Right, the transaction was concluded when the exchange rate was 19 Rand 87 to the euro, right? The installation took place in November and the server was ready for use on 1 December 2022, right? And the exchange rate was the same when the installation took place. After the installation, the hours of use of the server before its update, right, was estimated to be what? 140,000 hours, of which 6,000 of these hours were used in the 2023 financial year. All right. Then the fair value of the land increased this, that. We're not in the land now. You guys understand land. Right. So what do we do? Right. So obviously the building is straightforward. Okay, the building is straightforward, right? First thing, the building cost is 4 million for the residual value of 600,000, estimated useful life of this. The building, okay, all this was brought into use on 1 January 2021. So how do we deal with the building? Right, quickly. Also with the building, we come and say building. So you need to reference your work, right? Building. Maybe you call this calculation 1, if it was part of the exam, right? Cost, right? The cost is 4 million, right? And then depreciation Depreciation, you say for 2021 financial year, right? The cost is how much? 4 million minus residual value of how much? 600,000. Everything over 20 years multiplied by, right? We said, remember our timeline? Our timeline, we said from 1 Jan to 30 April 2001. So it's 4 months over 12. How much do we get? Let's move, people.
56,660.
Yes, Oluwatu.
It's 56,660. Is it? I got 56.
I guess they say we must round it or to the
Yes, yeah,
nearest
but
parent.
still it's because it's 4 6, so it's 5 4 4, like it's 4 6 then.
So that's our depreciation for 2021. Then for 2022, right? For 2022, it was there for the full 12 months. Né?
Oh, yeah.
So for the sake of this, I'll just write it in full. For those that don't yet understand depreciation. Right. Remember, depreciation is about the what? The what? The wear and tear of the asset. So as you use it, it is losing. Right. Remember, as you wake up in the morning, you are aging. Okay. Every day you wake up, you are aging. You are heading towards the 100, right? You understand what I'm saying? So same thing. So an asset loses value as it is being used. So there is a time frame. So we measure it over a year. So from the period it is ready for use, right, until we either sell it or it is damaged or so, or okay, out of use, then we stop depreciating. So per year, we need to measure from the time it was ready for use. So for 2021, it was ready for use for 4 months. All right. Ready for use on 1 Jan. So 1 Jan to the end of the year, we depreciated for 4 months. 2022, it was there for the full year. That's why we're saying 12 over 12. How much do we get? Those that have calculated?
170,000.
170,000. Thank you, Oluwatu. So now, for the sake of the note, remember, this is what you call the PPE note. All right. So in the exam, in the test, write it in full. Property, plant, and equipment. Don't write in shortcuts and have the number. It's a note, okay? Note for people to pay attention to. So you can either write note 4 or note 5, whatever number you want to write, right? For the exam, it's your choosing, right? So here, the cost, you come and say what? 4 million. All right. And then accumulated, we want the total value of how much this building has lost so far. So in 2021, it lost this. In 2022, it lost what? That. So remember, our year is what? Is 2023. So we want the accumulated at the beginning. So we come and add both this plus this. How much do you get?
It's 226,667.
Right. Just add these two people. Add these figures. You will get that amount. Okay. You're accumulating your adding. All right. So please remember in brackets. Okay. And then there's no complication with the building. So in the current year, the depreciation will be how much?
170.
170. All right. So here there's nothing about this, nothing about that. So the cost won't change. If there are no changes, watch out, right? If there are changes, there are changes. If there are no changes. So here, what will be the accumulated? it will be the 22,667 plus what? The 70 for the year, giving a total of how much?
396, 667.
396.
667.
Thank you very much. Then you can calculate. I won't calculate that figure for you. Right. That's for the exam, right? Or the tests. So that manner, that is what you carry as your carrying amount for next year opening. Right. So we are done. No complications here. I'm just refreshing people's memory on PPE. Right. So our main topic is significant component. So what you do, I usually like to present it using this table. So here I will come and write the what? I'll come and write the server. Then here I'll come and write the, what was that? I'll come and say, I'll come and say component. You can write whatever you want. Then I'll come and say total. Okay. Come and say total. So here I'll start off. I will start off with saying what, okay. Costs. Right, the costs. So I'll split the costs. So what you simply do, you come here and say, okay, so 250 was the total of the server. And then in this amount is the amount of what? Of the significant component, the small parts. So how much you get here? I'm getting 12155,000. Confirm.
Correct.
Right. And that means now when you're depreciating, right? When we are depreciating, it's the same, right? We're going to use the same depreciation period as this one because this was bought same time as the building. It was actually part of the building. So depreciation will be the same. So others tend to benefit if we do not understand depreciation. So let's depreciate the server on its own. You come and say server. All right. Depreciation. Right. Will be how much? You come and say 2, 1, that, right? Over, they say 10 years. Multiplied by 4 over what? Over 12. So this is for 2021. How much do we get? People we're slow. We have so much to cover. I expect people to have their
It's
calculator.
71,833.
Or 71,000.
833. 833. 71833.
Right. That means for 2022, right? It was there for the full. How much do we get?
$215,500.
Like this.
215,500.
215.
I can't hear you.
Is
215,500.
215,500.
All right. So if you add these things, how much do you get?
It's 287,333. 287,333.
Right. So you come here and say what? less accum dip. Right, you come and write that figure. Brackets. Right, let's calculate for the small parts. Okay, so for the small parts, it is 3 that, right, over, they said how much? They say the 1 that hours multiplied by. So with this one, the complication is not a complication, it's just a shortcut that the examiner wants you people to use, right? They are saying 115,000 hours. Then you come here, they said up to the end of this date. That means until the end of the previous year. The server had used how much? 39,000 hours. But in this amount is included this one that pertains to May and June. Right? That pertains to what? To May and June 2022. So what are they driving at?
June is not the financial.
So here is, right, they're telling us that, okay. So they are saying until what? Until June 2022. But remember, can you close videos? You just, okay. Our year end, the year end for last year, here, it was what? 30 April 2022. And then our current year is what? 30 April, sorry, 2023. So this is the current year. Current year. So now they're telling us that there are hours that are included in the what? In the 39,000, right? That pertains to the what? To the next year. So we only want hours until the end of the year of the previous year. So we come and subtract 1,568. How much do we get?
37,432.
37,400 and what? And
32.
Yes, hours. We want the hours that those parts have been in operation until the end of the previous year, because May and June is in the current year. We are not yet in the current year for purpose of what? Of calculating the accumulated. Right. Hope that's clear. So we'll come here and say 37,000. 37 what? 1,432.
32.
Right. So these are hours, people. It's not runs. Hours. How much do we get?
One on 2,296.
You guys are quick. This is what I want. As I talk, some are calculating. Right. Okay, so you'll come here and so you see, we are following what IS 16 says. They are saying if there's a significant component, depreciate it separate. That's what we're doing. So this is the depreciation that was allocated to the component. So the reason why we have this total is because at the end of the day, this is one thing. It's one item of PPE. So we can then come and add this. This plus this, how much you get?
399629.
33399
399 629.
629. Okay, thank you, Rips. Right, so then you can then come here and say, oh, that's how it works. You come and put your full amount here. So the separation is for the calculation, but when you're now presenting, combine. So what are you taking from this? Only this total, not this figure. These are just for calculation. Your concern is this one, this column. So whatever is here is what you transfer to be presented. Final product. So you come here and say 399. Continue, Rips. Oh, she's gone. Right, 629. Okay. And then you come and depreciate the current year. You come and depreciate the current year. Right, let's come and depreciate for the current year. So for the current year, let me just come here and say current year, same depreciation. All right. So for this one, it won't change. For the saver, will it change? Yes or no? Won't we use this one? This one on its own.
It won't change, Chair.
It won't change, right? So you still come and say 500 in brackets. All right, because this is not affected by this. That's why you are separating. So remember now, we found out that one of these parts were damaged and what, and we had to look for new ones from Germany. So, but remember, we need to depreciate until the point when we de-recognize. All right. So just before everything, all the mess took place, right? There were 2 months, right, that we used those small components. So we need to get the depreciation. So you still come and say that costs over the total multiplied by the hours for the 2 months. So here you don't come and say divided or multiply by 2 months. You take what you are given because you can depreciate, right, an asset using hours or production units or anything else. So once there's production units, please don't come and say multiplied by 2 months over 12. Principal, they might even give you minors for principal error. All right. So how much you get?
It's 4,704 rand.
4,700 what?
4 rand. So
Right. So that is the depreciation until that point. So you also come here and do that. Okay. Then, according to the standard, right, when the old component is no longer used, you remove it from the books. And you what? You recognize the new one. So when you're recognizing, right, you recognize the new one at its cost price, and you de-recognize the old one at what? Who knows? I've been preaching this gospel for a long time. Do you recognize it what? At Caring? Do you recognize at what price, at what value?
At carrying amount.
At carrying amount. People at carrying amount. So what is the carrying amount of the old component? Remember, the old component was damaged. So the company decided to say, let's get rid of this and hire a new one. So what is the carrying amount of the old component? What do you do? Direct me. $345,000 minus.
112,296.
Thank you. That's what I want to hear. You're writing on Monday. Minus.
4704.
Yes. That's what I want to hear. Right. How much is there? How much is there? Those that are fast in calculating, can I have the answer?
232,704.
232,000.
704.
Right. You take that figure and record it here for the examen. 232,700
704.
in brackets, because you're now subtracting it from here.
Sorry, sir.
Yes, Mr. Moses.
I'm getting a different amount. I don't know if it's me or.
I got 228.
Yes, I also got
Yes.
228,000.
Right.
Okay. Yeah, that's an arithmetic error. Right? But the 704 is the same.
Yes, sir.
No, there's no 704. It's 228,000.
It's 28. It's 228,000.
In my calculation, 228,000.
Okay. Right. So that's what you get. So you remove this. This is a lot of marks because you're applying a principle that they are testing. What they're doing, that's what they're saying is a test. They're testing you on principles. Can you apply them? So me emphasizing is me trying to make it stick. That when it comes, you don't panic. Okay. Right. So that's what you do. And then now they're saying capitalization of the new component. So you capitalize it at what? At cost. Yeah. Capitalize it at cost. So with this one, of course, we had to convert into rands. So don't worry about the conversion for now, to be straightforward, right? Remember, we bought it for 17,000, right? Plus how much? 6,000 euros. How much you get in total?
€23. 23,000.
23,000 euros, right? Then you multiply by the spot rate at that date. It was 19 what? Rands. 87 cents, né? How much you get in rands? I'm getting this figure.
40. Yeah, that's fine.
That's right. So once you've converted, okay, then you can depreciate. Right? So what I like about depreciating using units and what, you don't need to think. They will tell you the expected hours and how many hours you've used so far. So to be straightforward. So you'll come here and say 457,010 over 140,000 hours multiplied by 6,000 hours. How much do I get?
$19,586.
19,586 rands.
Mm.
So that's the depreciation for the new component. Okay. And then now, when you're coming to calculate the depreciation for the year, you take all depreciations. So there is what, let's say there is a, for the current year, there is depreciation. Oh, so this was depreciation. Right, and then dip. Your calculation is just a calculation, all right? For the new one. So the new one, we're saying it is what? 19,000.
586.
586. So that is the depreciation. So depreciation now for the year will be this plus that. 215,000, let's go. 500 plus 4,704 plus 19,586. I'm getting how much? I am getting 239,790. You put in brackets. That's a nice extra mark because it's not easy to get there if you don't understand what you're doing. Then remember, when you are recognizing this, we said it cost. So you come and record the new figure, 457. Because you are saying, right, to the shareholders, this is the value of the new component that is coming in. Okay, that is the value. Oh, they say, oh, okay, right? And you have got rid of the old one. There, that's why you put brackets. So brackets are saying out. No brackets, you are saying coming in. Right. Then at the end of the year, right, the thing that you have to do is remember this cost is no longer the same. This 2,500,000 was based on the saver and the value of the old component, right? But now we are saying there is a new what? Component in the house of 4 that. So that means now the new value will be how much? You come and say this minus that, remove it, and come and add the new one. How much do you get? Remember, this was forming part of this. You remember we said that. Now remove it and then add the new one. How much do you get? Come, let's move.
2612. 2612,010.
Right, that is the new cost. That's the time where you see cost changing. 261.
12,010.
All right, gone. Then the accumulated now, right? You know how it works. Let me delete these things. Right, you are going to take the original, the first one that we had, 3,996, right? Remember, this one was made up of the old component, okay, as well. Then you come and add what we depreciated during the year. You come and add 2 39790, right? Then from there, you subtract all those depreciations for the old component. This one and this one. Because we no longer need them, right? They no longer form the cost of the assets going forward. They no longer form that. As long as the asset was ours, we were going to what? Accumulate depreciation. But once that asset is sold or is no longer being used, we remove it from the accumulated depreciations. So you remove the assets together with the accumulated. So you'll come and say minus 112. $296 minus 47. How much do you get?
You 522419.
5.
22419.
522,419.
119.
Right, then you get your answer there. You're done. All right. And then you remember what I said. If there is land, right? Question is land, you apply paragraph 7.7. Go to the previous recording, you know what paragraph 7.7 is. Right, it's about telling the shareholders who revaluated the land and when was the revaluation done, right? We did that on Tuesday. That's what it's a statement that you write. It's an extra mark. You get 2 marks for that, free. But it applies to land. Okay, not to building, but just to land. So guys, that is the significant component.